What are fixed indexed annuities? How do they work? Are they really that safe? How do they earn interest? Lock in because you're going to learn all that today. We're going to learn more than most financial advisors actually know. Let's go. What's up, family? My name is Justin Smith, and I've helped many of people and financial advisors learn about the risk and tax mitigation when it comes to life insurance ever since the turn of the decade. If you have not checked out the other episodes in this series, today we're going to talk about fixed indexed annuities. When I first got into the industry and I learned a lot about the FIAs or the fixed indexed annuities, I heard a lot of bad things. I heard they have really high fees. I heard you couldn't get your money out because it was locked in. I also heard there was no death benefit. I'm sure most of these things we've all heard. But going opposite from most people in my demographic, I decided to learn insurance and finances and find out for myself. So over time in this industry, I've asked a lot of industry leaders about this product or this tool because I really wanted to understand how it worked. By the way, they're not perfect tools by any means. They do have upsides, but they do also come with downsides. But we're going to talk about that. I've also learned that properly structured for the right person or the right family, it could add a lot of value to their family. Now, since the turn of the decade of learning how these things actually work, I've learned that you don't put all your money into an annuity. And matter of fact, annuity might not be the perfect tool for you. But after years of seeing someone who decides to allocate a portion of their retirement funds to these fixed index annuities, it can really help them feel more secure. And it'll also help them sleep at night at times like this when the market is down. So I want to help you understand. For starters, what is a fixed index annuity? A fixed index annuity is a contract given or issued by an insurance company which gives you the opportunity to actually earn interest. Now, this is based on positive changes in the index like the S&P 500. But regardless of whatever the index does, whether it goes up or down, when the index is negatively impacting the market, it's not doing anything to your fixed index annuity. You're safe. Also, your FIA, your fixed index annuity, does not do anything with the stock market, nor does it do anything with your investments when it comes to equity. FIA is only a guaranteed insurance contract, but it earns interest on the positive flow of the index in the stock market, but it plays on the external side. By the way, other than the S&P, there are hundreds of different indices you can choose from. I believe the number one thing when it comes to the FIA, the fixed index annuities, that make them so attractive is the 100% principal protection, or guaranteed to not go negative. So this means you can never lose money when the market goes down in a fixed index annuity. FIAs can also help control and mitigate the risk of the financial market. So fixed index annuities can be used for two purposes. Number one, they're a safe accumulation tool. And number two, they can also guarantee a lifetime income. But the cool thing about it is you don't have to take the guaranteed lifetime income, or you don't even have to take any income from your fixed index annuity. One of the most important things that are misunderstood when it comes to a fixed index annuity is they are just used for that safe accumulation tool. But they also have options to mitigate that longevity risk. So this means you can have guaranteed income for the rest of your life. Make sure you lock into this channel, lock into this series, because we have more episodes coming about what guaranteed income looks like in your fixed index annuity. You can click that subscribe button now. FIA, fixed index annuity, can also be an attractive alternate to things like the bonds or the CDs that you have. But keep in mind, although the interest that they credit you is linked to the S&P 500, the anticipated interest will be more connected to the bonds rather than the stocks. So this is not necessarily a stock market replacement. Now, this is also a big misconception because most people think, financial advisors think, that the annuities or the fixed index annuities are linked to the stock market. It should only be a replacement to the allocation within the portfolio of the stock market. So yes, in my opinion, I believe they should only replace the bond portion or the CD portion of your portfolio. Now, the difference between a fixed index annuity and bonds is fixed index annuities have that principal protection. They don't go below zero. But bonds, they do subject to capital loss. You as an owner should not think of fixed index annuities as an alternate to the stock market. or owning stocks. This is even though fixed index annuities are very competitive or can be very competitive when it comes to market loss. So yes, fixed index annuities can definitely perform very well over time if you have the right contract. You can expect anywhere between 3 to 6%, and that's without the market volatility. Pretty reasonable. Like I said before, this should not be compared to stocks. This should only be compared to bonds and CDs. This is because bonds and CDs have a similar risk characteristics compared to what stocks have. Now, these are great accumulation tools, but if you're anywhere between the ages of 30 and 40, I wouldn't necessarily use them for accumulation. But these can also be great accumulation tools in retirement as well. That means don't put all your money in an FIA, fixed index annuity, just because it's a safe accumulation and it earns 3, 4, 5%. It's an allocation. This means it can be something that you allocate a portion of your retirement funds to. You definitely don't want to get over allocated. We're definitely going to go more in depth when it comes to allocation in other episodes in this series. So the main goal of this episode was just to learn the basics of what the FIA, the fixed index annuity, does. So if you're looking to get one or you already earn one, hopefully by the end of this channel or the end of this episode, you will learn a little bit more. My name is Justin Smith, and we'll see you next episode. Peace.